Another week, another trading cycles video. We are now in week 40 of the year 2023. Before we move on with our video, make sure that you like and subscribe if you haven't already. And also keep in mind, we do not provide financial advice here. All the content that we share is intended for educational purposes only. Always trade the price and not the prediction. My name is Eric, and I'm here as always with Urmas. How are you doing, Urmas?
I'm doing very well, as always, yeah.
That's good, that's good.
Nothing has changed, just I've moved a bit to the warmer climate at the moment, so yeah, all good, all good. Yeah, and markets have moved as well a bit, to be honest, yeah. So last week was quite interesting one. Beginning of the week went as quite expected, so the downtrend did continue, but then Thursday we had some upward movement, and Friday did end up a bit lower again. So yeah, it was an interesting week and quite many trading opportunities as well within. Now I wanted to cover maybe a bit of bigger picture here and see some patterns as well on the market, what is going on, as that should give us a better understanding where we stand at the moment, as it's really hard to see if you are looking too close. So we need to look a bit further away sometimes. So here we have now a couple of years of market data, and as we all remember quite well, last year was a good downtrend here basically, and we had this trend line forming here, which was broken in the beginning of this year now. It was retested here back in March when we had the banking crisis, and then the rally began. Yeah. Now, if we draw a couple of lines here in regards that trend line, firstly, if I make a copy of that and form this channel here, basically, yeah. So let's cover this bottom and this bottom, yeah. So there was a slight breakout here in June last year, but let's keep it that way. So I'll explain why in a moment. Now, when we draw here another line, basically covering this height and this low of this channel, and we will move it here to the breakout point where it did break out from this channel. Then we will see that basically that width of the channel did point us to almost to the top of the market now, what we've seen in the end of July. So that's quite interesting pattern here. Now there was another channel forming after it broke out, and I'll draw these lines here so you can see better basically. So those tops here, yeah. So basically, I'm pointing to these ones. So we did see some sort of channel forming in here as well. Now let's make a copy of that and draw it to that lowest point here. Okay. Another thing which we see now forming here, or has formed already, is a head and shoulders pattern here. Yeah. So we have this left shoulder, we have a head, and we have the right shoulder. Yeah. Now let's draw a couple of lines here as well, so we have better visual understanding. Yeah. So that's the shoulders line, and then we will draw the neckline as well, which was basically around here. Okay, and now we have broken out of that head and shoulders. When we draw here another line from the top of the head to the neckline, and we move it a bit downwards to the breakout point here, can you see what it points to, basically?
So it's going to keep going down most likely until it meets that bottom line there. So
exactly.
That's going to be a new channel.
We have this channel in play now, So we expect that a new stronger support line will be somewhere around this 410 point line. Well, we're talking about spiders here, yeah, or 4,100 points on S&P 500. So basically, yeah, this is what we are looking at the moment. So we do expect that market will continue falling. At some point, we should see some sort of retracement now, possibly to that neckline as it is a support, or we might even see up to that level here, which is highly unlikely, but obviously we need to follow the price, not the prediction. So we still are a bit cautious, but that's the thesis at the moment that I have in my mind, and obviously not to be too biased towards that. So we still are open to other options as well, but this is one of the scenarios that we got going on. And yeah, so hopefully that explains a bit what sort of picture we are looking at this stage. And as we know, this head and shoulders pattern is very bearish pattern. So after that breakout point, it should continue lower for quite some time. Yeah? Now let's have a look at last week's price action as well. So seasonally, we had a thesis that the prices might raise up until midweek, but what actually happened was they did fall up until that point and then retraced a bit. Yeah. And in that sense, our statistical model was more accurate, as we saw from here. It pointed to downward days on Monday and Tuesday, and then turning point on Wednesday, and Thursday was positive day, and Friday was again negative day. Yeah? So it kind of followed that very closely. Yeah? The same pattern seasonally was with Qs as well, so it didn't hold that well. And as we do understand, basically that October should be seasonally very bullish month already, but we might see some fear building up there as well. So I'll explain in a moment what I mean by that. Yeah. Now, the 50-day moving average is still in this green zone, which is below 30% area, and we expect this trend to continue here for a little while more. Yeah. And sector rotation hasn't seen any new leaders, so energy sector is still leading in this quadrant, and others are very slowly moving towards their targets. Yeah, basically. So nothing new at the moment in that sense. Fear and greed index did build up some more fear. So last week it was on 36 points. And this week it fell to 28 points. Yeah, so it's reaching already that almost extreme fear area. And astrologically, we have a new month now as well ahead of us. So this week we don't see much movement there. Possibly Thursday would be another turning point. And next week, though, is going to be more eventful. And we have solar eclipse and lunar eclipse as well this month. So these are quite important events as well for the stock market usually. So these are something to keep an eye on. So we'll cover them a bit closely when we get to that point. So firstly, we need to go through this week. Now, seasonally, we have seen that we have now gone through that bottom part here as well. So we have seen now markets pointing a bit to upsides, and we do expect that this week is going to be quite bullish as well, at least until Thursday. So the same goes for the 60-year cycle here. And the second half of the month is pointing a bit downwards, and not only a bit, there might be another October panic forming. So basically there are certain things in play. First of all, we have this pattern that has quite often pointed to October crashes when about 30 months before October, we will see a full moon forming within 10 days from spring equinox. Yeah. So that's an interesting pattern which quite often works, and this year we have this scenario in place, so we should or could see another October crash. And this is an anniversary now from 1987, when we had a very strong market decline in October, and also pointing, which is basically 36 years. That's 36-year cycle. And if we double it, we get to a 72-year cycle. And exactly 72 years ago, in 1951, we had another October crash. So that's quite an interesting pattern there, and therefore they are both pointing that this year we should see another October crash coming up. So it is expected somewhere on the second half. I do suspect that it's going to happen on the 16th or 17th. So that's something to bear in mind. So with VIX index, we are still in that danger zone, so nothing has changed. Yeah, all right. And this week now, seasonally, we have quite strong upward trend here. So 9 out of 12 years we have seen rising markets. And the same goes for Qs, so similar pattern, 9 out of 12 years. Again, this market has been risen. Now, seasonal statistics are not so clear in regards. So basically, we see up and down movements throughout the week, and there are a couple of turning points, but the strongest day upwards should be Thursday the 5th, yeah? And that might mark another turning point on the markets. Yeah? Now, macro view, basically last week we did see some interesting numbers there. So US consumer confidence is falling, which is not a good sign, obviously. On the other hand, Eurozone inflation is falling as well, so that's a bit better sign now. So if we get closer to that target, then maybe ECB will stop rising rates as well at some point. Yeah, so that's a good sign, but usually they tend to be too late to party. So when they stop raising, then obviously something has already broken. So and at the moment it doesn't really look good in Europe. Some areas are in quite a bit of trouble already, seeing there economically. Now this year's numbers, we will see some job market numbers from US on Friday. So that's what we're keeping an eye on. All right. So let's get back to the charts now. So turning points for October are now on this chart as well. So we will point out 5th, the 10th, 16th, 19th, 24th, and 30th of October. Yeah, these are quite strong turning point areas. And as you understood, we do expect this week markets to rise a bit until Thursday, the 5th. Yeah. So gold market has been falling quite sharply now, and it didn't quite stop with that turning point on last Thursday. So let's wait and see how it reacts this week. So the next turning points coming up on gold market are 11th, 20th, 25th, and 31st. So Bitcoin as well. So Bitcoin is now coming out of that strong seasonal decline, and we shall see a better period coming up for Bitcoin. Now, turning points wise, we have marked down here 4th, 11th, 20th, and 28th. Okay. So, and one other thing I wanted to show is the HYG, which is the junk bond market basically, and that will kind of indicate where we stand with the market risk appetite. And it has been on this cone basically information since last summer, yeah, somewhere there. And now I was waiting for a breakout from that cone, and we have seen one now, and it didn't break up; it did break down from the trend line here. So that might indicate that market is losing its risk appetite, and obviously investors don't want to risk that much anymore, and we should see more falling markets after that scenario, basically. Now VIX index did see some sort of increase here, so it kind of reached almost 20 point area here. And we do expect that it will see even higher highs here, yeah, during the October month. Okay, I believe that's about it. So those stocks that we had under our radar here, basically, lots of them have already reached their target. The ones in place still are APH, so that kind of retraced now. Then QRVO, which is also in that profit zone still. Then FIS, which did decline last week, and WELL, so that did fall quite decently, but on Friday it did bounce back, so it's not in the best position at the moment, yeah. But yeah, at the moment we are at quite important junction on the markets, and basically we're not going to bring up any new ones. We need to see what direction the market will take, and then act accordingly. All right.
All right, perfect. Thank you very much, Rumas, as always, and thank you for watching and listening. Very exciting start of the month coming ahead. Let's see where the market takes us. But yeah, if you haven't already, get subscribed, like the video if you haven't, and if you enjoyed the video, share it with others if you did enjoy it and you believe that the information that we share is important and it's educational and you like it, why not share it? And what else? You can leave a comment. That's cool. If you have any ideas or questions, those go in the comment section. We will definitely take those into consideration when we are making our videos. But that's it from me. I shall see you in the next video. Bye bye.
Exactly. Have a good and interesting week.